Hello, everybody. On the back of the Refinitiv Liber webinar, Riders on the Storm, we are running a series of interviews with industry experts to gather opinions and insights about trends in the fund industry. My name is Detlef. I'm heading the Refinitiv Liber Research Department for EMEA, and my guest today is Mathilde Dufour. She is Head of Sustainable Research at the Liber Fund Awards winning company Mirova. Mathilde, how should asset managers integrate and use ESG criteria in their portfolio management processes?
Thank you, Detlef. So happy to be here. So basically, when you want to start to integrate ESG criteria, you just first have to raise the important question of what is it? Do you mean by ESG criteria? And very quickly, you need to ask yourself, what is your intention? What do you want to do with these criteria? How do you want to impact the way you manage your portfolio regarding these criteria? Here we can see that there are several ways to look into ESG criteria and to implement them into the investment process. You can use ESG criteria as for ethical purposes because you have convictions that, for instance, you don't want to be exposed to a certain number of controversial activities like tobacco, arms, etc. That's the first way to look at ESG. Another way to look at ESG is to say, I think that using these kind of environmental and social issues, which are traditionally not looked at by the market, can bring more information for me and help me manage my risks as a portfolio manager. So you can focus on environmental and social issues, which are more likely to have a financial material impact on your portfolio. There is also another way to look at ESG criteria is to say that beyond this financial materiality, you also want to have somehow an impact, meaning that you want to have a positive impact on environmental or social challenges that the world is facing. So there are very different ways to integrate this. We see that on the market, many players are now moving from purely excluding companies in the portfolio based on ESG criteria and to move beyond that to a full integration of ESG.
Yes, thank you. Let's put the words into action. How do you integrate and use ESG data and criteria at Mirova?
So at Mirova, we are an asset manager fully dedicated to responsible and sustainable investment. So when we are created back into 2014, we created the company with the aim of combining financial performance and environmental and social performance. So the way we integrate ESG criteria is really not only to look at these issues from a risk perspective, but even more to look at it from an opportunities perspective, and in particularly with the ultimate goal to invest in companies that have positive environmental and social impact. So that's where the concept of double materiality comes in, which is integrating ESG both for managing the source of risk, but even more to be able to invest in the solutions provider of tomorrow. That means that we have today lots of environmental challenges ahead. Climate change is one of them, but biodiversity is a very important one as well, which is coming up on the political agenda. We also have many social issues that we have to address and on which companies and investors can have a role to play, like access to health, increased well-being, decent work, and so on. So really the way we look at these issues is as a starter when we design our investment universe, we have this lens where we look at companies from this perspective and try to invest in the ones which we think are able to provide these positive impacts towards the sustainable development goals.
Thank you very much. Which challenges do you witness with regard to gathering and analyzing ESG data?
Sure. The thing is, when you look at environmental and social issues, especially in our business where we used to work with financial data which are robust, standardized, and in a way quite easy to measure. When you look at environmental and social issues, you often come with the conclusion that it is really qualitative. And if you add on top of that this way to look at such issues is quite new on the market, you have a lot of companies which are providing poor information, or at least not extensive information, lack of standardization. So that means that from an investor's perspective, you really have to make your own conviction on how the issues you want to integrate such issues. If I take the example of climate change, for instance, which is today one of the easiest or at least one of the topics on which we have most tools to use. Even on that, today there is no consensus on how companies and assets we invest in should be measured against their carbon footprint and the way they can contribute or not to the energy transition. So today, that's why I think still on the market, it's really important to have lots of expertise internally. That means that, for instance, what we do at Mirova is that we have a large team of experts dedicated to environmental and social issues, because if you take carbon, but that's the same for other environmental and social topics, you really start to get into a lot of complexity. If you look at businesses and their business models, it's important to understand how the product, how the services are able to contribute to this transition. If you take hydrogen today, hydrogen is a big word we hear everywhere, but you really have to understand the specificities of the technology the company is providing. So for all that reasons, it's really important today for me to develop strong expertises internally.
Yes, is the missing standards of data, and you already mentioned this, in some cases, bad data quality, an issue, and where do you see the weaknesses in current reporting and regulation systems?
Well, I see several ones. So the first one is that of course, as an investor, we invest in many geographies, and today there is no global standard. There are some attempts to standardization. In France, for example, where Mirova is located, we have seen since several years some standardization in reporting required from the public authorities. We see in Europe some kind of standardization emerging right now with the European Green Taxonomy, for instance. But as an investor, these won't cover the whole universe of companies we are looking at, first thing. And then again, I think even if we have lots of standardization coming ahead of us, there is still a great need to interpret these data. Looking at data reported by companies really isn't enough if you want to understand the strategy, the perspectives of the company. You can't only rely on quantitative data, even if it's standardized.
So does that mean that you need a totally different skill set as an ESG analyst than as a financial analyst?
Definitely. I mean, that's one of the choices we made at Mirova at the beginning, was whether we should integrate these perspectives in the traditional financial analysis or have a dedicated team of experts. We really made the choice to have this dedicated team because I think that in terms of skills, as you mentioned, you don't need the same background. In the team, we have lots of engineers, we have experts of political studies, etc., which have a different perspective in the way they look at companies, which is, I think, a very good value added.
Thank you very much. Just changing the topic, what's your view on the Sustainable Finance Disclosure Regulation, the SFDR, with regard to the classification of funds under Article 6, 8, and 9, and how do you handle this at Mirova?
Yes, so I think it's very interesting move from Europe to that regard. Just to remind that this regulation follows a certain number of actions which have been held by the European Commission since several years. It follows the works provided by the high-level expert group on sustainable finance, and it's really going in the direction that I mentioned, which is good to standardize for the whole industry. That being said, this comes with a lot of complexity. I think one of the key advancements from this regulation is that it helps, and I think that's one of the objectives. It helps to prevent some kind of greenwashing, if you will, and helps, clarify also for the end investor, because, the goal is also the end investor to have a view on how the integration is done by ESG integration is done by the asset manager. So at Mirova, we have put all our funds as an Article 9 as of today, because the concept of the SFDR regulation, which is really important, and I mentioned it at the beginning, is the intention, the intentionality. And I think what really differs from Article 8 and Article 9 is this intention to have a sustainability objective, and not only, I would say, to look at ESG from an, a pure integration point of view. So in this regard, it really helps to differentiate between the different types of ESG today.
Thank you very much, Mathilde.
Thank you, Detlef.